Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. It is February 17th. It is Tuesday on this short trading week. It was nice to have a holiday. I hope you guys enjoyed your family day if you're Canadian, or President's Day if you're in the United States, or whatever country you're in watching me, joining me live. We are talking about investments and potentially option trades and a whole bunch of different things. So I hope you're excited to join me for the next little while. I hope you have some good questions. If you want to ask some questions about complex things, that is my absolute favorite, because I love to get into the nitty gritty and describe exactly what it is that I might do, or what we might look at, or what we might consider. Remember, anything we talk about here is not financial advice in any way, shape, or form. It's just what I'm doing, what I'm looking at, and what I might consider. I hope you guys are awesome. Let me know where you're watching from, and it looks to me like it's not working, but maybe I am working. Hopefully I am. If somebody could let me know in the chat, that would be fantastic. And let me know where you're watching from. I see we've got a couple people online, so that is appreciated. We're going to get right into this because I don't like to waste anybody's time. The markets are doing a little bit better than they were this morning. So let's take a look. S&P 500 up. Yes, thank you, Frank. Thanks for letting me know. Appreciate it. S&P 500, the SPX, trading at 68.58 right now, up 0.32%. If we were to look at the daily chart on this, the SPX was actually down this morning. We saw a down move. You can see this candle has a large wick on the bottom. That means we opened, we went lower, and now we are closing higher. This is usually an indicator that we're in a bullish momentum. If there's no wick at the end of the day, yesterday on Thursday, we had a consolidation candle, and this is usually a little bit on the bullish side. Now, you can see I have a couple Bollinger Bands on here. I've got VWAP down here. I have this really, really tight Bollinger, and we're at the very bottom of that range. Point of control is right around where we're trading right now. So we're right at the point of control based on this recent range. On some indicators that we might see here on the strategy, we had a long signal back here, which was a Bollinger Band strategy, and we have no exit point on that particular strategy, which is kind of nice overall. We're looking for moves to the upside. Now, NQ is definitely showing some weakness. We saw this come down into this kind of ascending triangle, not really great. We broke outside of it. We come back up. Tech in general having a bit of a tough time. We haven't hit last week's low. We are still trading in a nice little candle here, with the bulk of the trading happening at the top of the range for right now. So this is, again, a slightly bullish indicator, but overall the trend is slightly to the downside on NQ and just tech in general. Now, Russell, on the other hand, is a little bit on the other side of things. There's been a bit of money flow from tech into the small caps, and we can see that here. We see that recent rise. We're trading in the lower portion of this small Bollinger Band, but still above the longer term average by a long shot. So definitely in an uptrend on the small Russell. Now, VIX today was up quite nicely. You know, we had some premium here, almost at 24 value this morning. We're pulling back a little bit around this 20, but this red line represents where you know, kind of average VIX is. We're in an elevated VIX environment. This is ideal for premium selling strategies. This is where we want to sell premium into the down days. Now, everything seems to be going down if we're playing individual stocks. US oil pulling back a little bit. We're slightly under the point of control. We're definitely inside of this green range. We're at the middle of this recent Bollinger Band, and we're above the VWAP. We saw a little bit of support there. So we're seeing that happen. Gold dropping below the 5,000 handle. We're at 4,900. Point of control still down at 4,000. Gold is showing relative strength, but we're just having a bit of consolidation after this previous breakout from last month. So we're looking at, you know, just moving potentially sideways for the next little while on gold. Silver, on the other hand, is still in overbought territory. We're definitely trending to the downside. I see more risk to the downside. Point of control far below where it currently is trading. So I would be, I don't have any positions on, but I would be leaning short silver. Let's look at some of the big stocks. Apple up 4% today after these couple of days of down. And again, point of control, super important here. We can see where that white line represents where a bulk of the trading has happened over the last little while. Even though the stock traded down here in September of last year, there wasn't a lot of volume. There's been much more volume up here at this level than there has been at these previous lows. So we do have some large volume around the 260, 256 level. So we can see that, and likely why we're seeing a bit of a bounce there. Terry, winter's back in Claire's home. We got snow for the first time today here in Kelowna. My pool has been on and off. I actually got out there last week and like pulled some of the leaves out, which is usually a spring job. But here it was like a couple days before Valentine's Day, and I was able to just enjoy an afternoon outside, completely melted pool, you know, above the tarp, and cleaned off all of that stuff. And it's been wildly weird weather, and today we got a little bit of snow, not even enough to shovel. So I'm enjoying, as always, where I live. You know, try to get out as much as I can, but there's definitely no snowshoeing, no cross-country ski this year. It's been kind of a little bit of a different holiday, or a different season for us, so to speak. We've got 13 people online. I appreciate it. Only one like. If you guys could drop that like, that would be fantastic. Leave a comment. Let me know where you're watching from. And if you have any questions specifically about specific stocks, let me know in the comments. Just drop the ticker in there. I'll pull up a couple of different paid resources. We can take a look at it together. We can look at the charts. We can do some technical analysis. And we can, you know, we can decide what kind of trade we might want to take based on parameters that you have. So if you, the best way to do this is for you to, you know, I was having a conversation this morning with one of my friends who said, you know, he's looking at end phase, and we'll take a look at it, but he believes that end phase is going to go to $50 over the next coming weeks. And when we have that kind of assumption, it's really easy for us to trade. It's very easy for us to say, where can we make money? How can we set something up? So that's the easiest way, is to like have a specific range in mind. Like if I was looking at Apple, what I might want to do is I might want to look at a range that says, here, I think we're going to have support at VWAP down here at this level, at this 240 level. And I really don't believe we're going to trade much higher than 283 over the next couple weeks. We're going to have some likely consolidation in this area. How can I play that? And we can build parameters that make money in this whole area and have risk outside of that area. And it's a very cool thing that we can do. The way that we can sculpt with options to build profit tents is fantastic. We've had earnings have already passed. Apple's kind of in this range. I mean, that's what I would want to build. And when the volatility is this high, when we're above that VIX level of 17, well, it's a good time to be selling premium. So I could set up a trade very simply like an iron condor and do something like that. So if you guys are interested, thank you for the likes. I do appreciate it when you guys hit that button. And let me know what tickers you want me to look at. Well, otherwise, we're going to scroll through a few of these. I've got AMD trading at 204. I'm still a little bit bullish on AMD, but not a ton. You know, we've got point of control way down here. Let me turn myself off here. Point of control is at 161. That's wild. Now, granted, that is going back to this announcement that they're doing an agreement with OpenAI. So is this gap going to fill? There's potential here, but what we were seeing is we saw some higher lows, 1, 2, 3 higher lows on the chart. I'm just going to draw a line on here, and we're going to just show that little indicator that we saw that. Are we going to see a repeat of that? You know, is there potential? Let me find the tool here again. Is there potential that we see the same sort of thing? We don't know. What we can do is we can look at these kind of nodules. We can say, well, there's a nodule down here. There's a large trading volume up here around that 217 level, 215 level. And we can also look at VWAP, knowing that that will control a lot. If we look at just the information only past the announcement, you'll see we're actually below the point of control. So if we look just at a more recent history, these point of controls jump around. So it depends on which candles are showing on the screen. In this case, I'm only looking at the candles here. Let me just close this so we can see that a little better. Looking at the candles on this side and saying, well, where was the bulk volume? Well, the bulk volume was right at 214. And I can see it wicking up to that price again. That would make a lot of sense for me. We saw some resistance here before, and I can see that price moving up into that action. Now, time frame, it's always time frame specific. Ryan says, my Enphase solar panels are leaking like a hydrant. Oh, that is no good. Those, I hope you had some success getting them fixed. I know Ryan sent me a picture last week of some just not very nice action at his house. How is everybody's weather? I hate to ask that question because it seems so like mundane about like weather, but let me ask two questions. How is the weather in your area? Let me know where you're watching from. How much snow or ice or sleet or hail or sun are you getting? Hopefully some of the Australians can chime in and tell us how great their summer is going. And also, can you tell me what's the most exciting trade you put on this week? I would love to know, like, what was something that you put on that you were either directionally correct, or you were you had an assumption, or you just were doing some technical analysis. What was your best trade last week? I would love to know. Type in the chat and let us all know the types of things that you like to do, whether it was like a diagonal or a bull credit spread or something like that. Hopefully it was something complicated. Maybe it's something simple. Maybe it was just like a short put. But I would love to know. Ryan says the only thing dry around here. Yeah. Well, hopefully you get that fixed up. The ARK, let's take a look at that. Tech, we're seeing this tech sell off. And is it like a huge sell off? There's people out here that will draw a nice head and shoulders on this pattern. I don't know if you guys see that here. We've got like the head, and then we have. We hate to draw the double head and shoulders, but this is usually an indicator that we'll see some more downside. But what happens as we get into this is that we have to watch this point of control, and we have to watch this VWAP. So this trend line to the upside. As soon as we see a stock breaking underneath this is my signal to go potentially long, especially on something like ARK, which is an ETF that tracks a whole bunch of technology companies. So it's interesting, just to watch this price action, because a lot of people look at this and they go, oh, it's, this is just going down. I look at this as opportunity. And if we go way back, let me just compress this a little bit. You'll see that I drew on here, these red lines. This is the uptrending channel going back from December of 2022. This has been what ARK has been doing. So and you guys watch, I review these similar stocks every single week. So over the last couple of weeks, not even the last couple of weeks, since June of last year, this has been above this area. It doesn't mean that it's not tradable. It just means that we're outside of this, very specific range where we were showing that trend line kind of moving to the upside. So this is a nice opportunity. And what I do with opportunity like this is I start to add to my position. So this is when I like to get into positions. I typically am not buying when we're above a range, or if we're in the top portion of the VWAP, but neither of those things are happening right now. We're inside of the long-term range and we're below VWAP. We're certainly above the point of control on this long term, but if we look back at like just the last year, we're actually trading this reset. We're trading below where most traders have been buying and selling over the course of the last year. So it's an interesting time. Now, a company like Adobe, it's harder to get long when companies like this are going down. Adobe has a pretty big moat from a profitability standpoint, but this trend is pretty solidly to the downside. And this is a concern, obviously, with AI and just like the longevity of their business. Are they going to be able to handle, what AI is doing to the business? Because they're like a graphics company, right? They have a lot of graphics, and is that going to impact them long term? Whereas Amazon, if we take a look at this, it's trading in a range where it's definitely still in an uptrend. So if we look at the long term on Amazon, the stock has been trending up. And if we look just at these Bollinger Bands, like let's just look at that. This chart draws them on here for me. And we can see that there is potential opportunity as we get into it. Where do I want to be buying stocks when I look at a chart like this? Well, I certainly want to be buying them when they're at the lower portion, because what happens when we buy at the low? Generally, if it's a good solid company, these go up. And we can see that happening again and again. We can see these long indicators marked in blue showing a move to the upside, a move here to the upside. And then just recently we saw one. We're actually trading cheaper than the last indicator. And we're trading at the long-term Bollinger Band. I like Amazon from here, and I think that this tech route that we're seeing is partially driven by these big companies, unfortunately, but some of them are getting to an extremely good valuation. Let me just jump over and take a look at some of the others. Let's take a look at Google because it's on the opposite side of things. Google's showing a long indicator as well, but it is definitely way above its point of control. Again, on the, this is where people talk about like the AI bubble and, is it going to pop? What's going to happen? Which companies are going to survive? And you can see that Google was trading just in if I just draw a line on here, we're right through the trend line. Google was just trading on a nice little path to the upside. It's been nice. And all of a sudden, since August of last year, we saw this move to the upside. And this is where these pullbacks are quite normal. So the question becomes, how far down does it come? It's harder to get long something like Google. If we take a look at Meta, on the recent, where there's a lot more volatility in Meta in general, just because of the way the company is structured, the way the advertising may affect it. But look at these long signals. We saw a long signal here. We saw an exit. We saw a long signal on the Bollinger Bands. We saw the exit here. And what's happening? We've got lower Bollinger on both of them compressing to the upside. We've got a little candle here. We've got higher lows happening. If this pulls down and breaks this, I think there's going to be opportunity in Meta. So, we have to just kind of play our cards, play with things that make us money over time. This is utilizing theta decay and looking at the long-term position and where we might want to add to these. Eric says, San Diego, sunny 15 degrees today after a totally gray, rainy Monday. I'm glad that you're sunny and 15 degrees. San Diego, you guys usually don't talk in Celsius. I love it that you are. In certain areas of temperature, I can do that conversion very, very easily. Some of them I'm not so good. Yeah, the solar panels leak. I saw the video of Ryan's solar panel. It was like that. This is crazy. It's like. I'm assuming it's for his pool, so it's like keeps the solar panels help heat the pool. We have that here. I live in an area where we our pool freezes over completely in the winter, which is normally you could just walk on it in this time of year, and we wouldn't even think about having no ice. And today it's just like I wouldn't be surprised if ducks were coming to come and hang out in it. Ryan says combo electric pool heat, and then Terry says 38-kilometer wind, minus 30, wind chill, blizzard conditions. Very nice day to be retired. No kidding. Andrew says plus 2 degrees, sunny in Toronto. I'm glad you guys are getting some sun. I was on a call today with a fun little company out in Toronto, and I'm excited about working with them because I'm hopeful they're going to come back and give me like an exclusive discount to help promote their product. I think their product is pretty wild, and I'm excited to do some integration with it. And I think that you guys are going to be excited about that as well. I've been really focusing this year on trying to make sure that my partnerships are working out for everybody, and really kind of diving into the companies that I like working with and saying, are these products good and are they helpful? And if they're not, I'm just, pushing them to the side and saying, yeah, you know what, I don't need to work with you. Where before I was like a little bit, I was able to take a little bit of promotional material and say, and push it out. And now I'm being a lot more discerning about who I'm working with. So when you guys go to the new website, I hope you've had a chance to check it out. All of those affiliate links are, vetted and verified by me, and most of them come with a discount. So whenever you're considering signing up for any service at all, check with me first, because I may have an affiliate link which gives you a discount. And that's what I do. I negotiate with these companies to say, look, I'm going to provide you guys a service by promoting your product, but what do my customers get? That's more important to me than anything. I want to make sure that you guys are getting a deal for watching me. That's how this works. That's what I want. Let's take a look on Visa. Yes, Visa is at a great level. Andrew, thanks for bringing that up, because I have a Visa trade on. We talked about it on Friday, and the Visa's definitely at a lower side of this. Again, watching those Bollinger Bands. So we see that point of control around 348. We see we've broken out both of them. So I'm running, again, 2 sets. So we've got VWAP with 2 standard deviation and then the Bollinger Bands blue on here. And look at this, we're trading below. We're having a nice green day. My expectation is Visa to the upside. I have bullish trades in place. I believe that Visa is going to be trading above 340 again. That's kind of the level that I'm watching, closer to this VWAP around that 344. But let's take a look at what investing.com says about it, because it gives us a very specific price action, which I love. And this is, again, talking about, where specific companies that I like working with and why I promote them. And there's actually a sale on, if you guys are on my email list, then I sent out an email this morning with the promotional code, because they're running a sale right now on investing.com. It's 55% is their sale price. And then because you watch me and you use my link, you get an additional 15% off. So what is that? Let's see if we can do that math. That's a 70% discount for a subscription to investing.com. So if you're thinking, oh, well, I haven't done this before, I haven't signed up for these types of services. These are like an annual service that you would join. I'm going to drop the link in there right now, my referral link. But so it's in the chat. You guys can check that out. And what it does is it gives us access to this kind of fair value when we look at different stocks. So when we look at Visa, I can see the current price is $319, but the fair value, they mark a price right on it, $333, upside of 4.4%. So, and then they give us a really quick snapshot, has raised its dividend for 18 consecutive years. 21 analysts have revised their earnings upwards for the upcoming period, and they're a prominent player in the financial services industry. Now, of course, we're seeing a bit of potential capping on rates in the US, which is one of their biggest markets. So that is cutting into the stock price in general, but this stock pays such a massive weekly premium. So let's take a look at how we might want to set up something in Visa at these levels. So if we let's go over to Moomoo and we'll take a look. I'm just gonna look at that little trade. You guys can screenshot that. This is something I was looking at this morning. Nice little trade on here. There's basically 0 chance of loss, but that's it depends on your fill price. That's showing this is showing a max loss of 0. It's showing based on a mid price that is not realistic. It's about $2,400. So there's a very, very, very small amount of risk in the inside of this, but this is a neutral trade, and this is using a double put diagonal or double put calendars. So 2 to the downside and 1 to the upside, and you can split that out. I made a similar trade in my Patreon group this morning. So you can sign up either through WAP or through Patreon if you want to become a members of the Drawbridge Traders Club. So if you're interested in that and you haven't checked it out yet, I can send you guys, well, I've already sent the website, but if you visit the website, you can get on the mailing list, and you can check out the links to WAP if you want to check that out. So investing.com, all my referrals are on the website. So if you guys are ever interested, or in the description down below, you can check out any of those. But let's pull up Visa. Let's take a look. So how might I play this? So again, stocks trading at 319. We're definitely in this low zone. We paid a dividend recently of 67 cents, and we had earnings, and earnings actually didn't cue that much of movement. This move has happened last week. So is there going to be a bounce in here? How might we play this? Well, one thing that comes to mind is like a poor man's covered call. So this is using diagonals. And because there's so much premium on the weekly, it can be quite lucrative. So typically with a poor man's covered call, I would want to sell about the 30 delta. So I would look at the delta column, which is here. I'm looking at the call side. I'm looking at the deltas. This is about 30 delta here. And that strike is the 327.50. So I might look to sell that. And I collect $200 for selling that premium. Now, just selling a short call in general is actually a bearish trade. So this makes money if Visa goes down or stays below 329. It's not necessarily a bad trade at all. Now, there's a couple of things that we can do. We can either take a bullish trade from here, or we can just set this up with the call spread above. So if I wanted to do the call spread like this, what I might do is embed a big butterfly above this. So this can be done relatively cheaply. So this is giving me $224. And what if I wanted to build, let's see if I can build like $1,000 wide butterfly in here. So I'm just going to build it right on top. I'm looking at the 320 I'm always trying to show you guys different ways of thinking about what we might do. So I'm selling the 327, that's giving me $200 to play with. Then if I buy the 320, I sell the 330 and I buy the 340s and I sell 2 of these 330s, I've created a butterfly. So it's a $10 wide butterfly. I hope you guys can see that. We're looking down here, 320, 330, 340. So we have a long call, 2 short calls, and a long call. This is going to cost some money. Now it is costing about just around $200. So this trade all of a sudden has a $27 cost. Now that's not fantastic, because what that means is that I have downside risk. Means that my probability of profit is really low, because I'm only going to make there's only a 30% chance of making money. But look at where this profit tent is. It's between 320 and 333. It's pretty nice. And we saw that investing.com showed that 333 fair market value. So this might be a starting point for me. What I might do from here is just kind of manipulate these wings. And this is where I love Moo, because what I can do is I can just move these over. So first of all, I want to take off my downside risk. So I might want to buy the 322.50 call and then bring this one in. So we're still at the same width, that 750 now wide butterfly. So I brought the long calls closer together by 250, and I'm still selling that 330 short call. This gives me a net credit of $62. All of a sudden that increases my probability of profit to 81%. This is a highly probabilistic trade that I would make money on it. Now, the return is relatively low comparatively to the max loss that was being taken. Max loss is unlimited. So depending on the type of position I want to be in, this may not be great. This trade is also short delta, which means that it makes more money if the stock goes down, not up. And we can see that with the dotted line here. What I would need to do to increase this is to either move the break even over or build a larger profit tent to the downside, or to the upside rather. So let me just move these a little bit tighter again, because I know these butterflies get pretty cheap. And by moving it tighter, I collect even more money. Now I've got $165. My break even is moved over here. What I want to do now I'm looking at a $5 wide spread. I kind of like that. What if I was to just move this over to where that break even is? Let me just move these. 332.50. Let's move this to the 330. What I'm trying to do is get myself in a position where I have a profit tent below this. And what I can do is I can increase these contract numbers. So now if I was doing 2 butterflies, what does that look like? Well, you can see my T0 line is still negative. This is even shorter delta trade, but my profit tent to the upside is actually getting pretty big. So this is still collecting a credit of $1.34 to do this. I have an 84% probability of profit and have a large profit tent above. If the stock was to trade between 328 and 330, there's a small chance of negativity here, but that goes away based on the date. So if we're getting close to expiration, say this is on the 25th to 25th, 2 days to expiration, we're still positive in that range. So it depends on where it might go. I don't mind this type of setup at all. Short deltas, opening for a credit, no downside risk. Stock moves up, we can build a profit tent up above it. And again, I can just build these. I can build these quite large. Oh, I accidentally deleted that. Let me add that back in. So we've got the 340, 330, 335. I'm just going to buy back in that 330, and I'm going to up those contracts to 3. So for the butterflies, we're basically using the credit from doing a short call to buy a butterfly. The other thing we could do is we could actually sell a short put. This would give us downside risk. If we were to look out, this is 10 days away, how much money can I get for selling just like the 300? This is, I can get another $100 just for selling this. I can't do this in Moo. I'm getting into too many legs in this case. But that is one thing that I could consider as well. Selling some premium to the downside, which we know is good in an elevated VIX area. If Visa goes down to 300, I have no problem buying Visa at 300. So I might want to take that short call or short put on there, and then have a larger profit tent, and that would eliminate what we're seeing here, which is this potential negativity, which is like a $90 loss in here because I collect another $100. This would make me green to about 338 a share. And again, I can just move these as I wish. I could even move the short call inside of the tent here. This would give me only a 32-cent credit. So I'm not making very much money if the stock goes down. The nice thing about this trade is that if the stock doesn't go anywhere, I still make 150 bucks this week on this trade, which is fantastic. I mean, that's why I want to keep my premium up a little bit. So things to consider. Now I could also just remove this short call altogether. I could just take it off and I could decrease the number of 330 calls that I want. I could just go minus here and I could get into a slightly simpler position. So that's something to consider. But even these butterflies as they are, like really inexpensive. Max loss is $72 on this if you can fill this for 24 bucks. If the stock goes between 330 and 340 in 10 days from now, if it's trading in there, this trade has a chance of making up to $1,400. It's got a low probability of profit. That's why I like to sell that extra call in there and give it a higher potential. But these trades, like buying a butterfly like this when the stock's trading at 319, if there was a rally, you know, it can be 25 bucks is well spent, or $75 well spent for these outsized returns that we can get. And there's a high probability that we go to the 335. Let's look at the delta on the 335 and see what the probability is. We're at a 13% chance that we could be trading at that level. So interesting. What other stocks do you guys want me to look at? We'll take a look at a few more here and we'll get into that. I'm going to pull up TradingView again. We're going to take a look through. I want to look at Bitcoin, but Bitcoin's down 1.4%. Again, we're in this downtrend. We're outside of the bands. We're outside of this upper band, this kind of grade area, and obviously this tighter Bollinger tracks with it a little bit more. I'm interested to see what happens with this price action, whether or not we're going to see a bounce and then a move continued lower, or if we're just going to move sideways from here. What else? Bitcoin to US dollar, because the US dollar is showing a little bit of strength today too, isn't it? Let's go through a few more of these. Let's look at Netflix, which is definitely trending down. And again, similarly, if you're wanting to get long some of these companies, I mean, there's definitely some opportunity here. Frank, Eric saying Visa is a processor rather than a lender, so a rate caps effect is indirect. Maybe the fear is that lenders will give fewer people credit. Yes, and they are a processor. I think that the fear is that the fear in general with that particular announcement is not so much directly affected with Visa, and this is why I'm looking at these long positions at the time. I think what happens with these companies is that when the news comes out, when the news breaks, that there's an overreaction in the market. And so that has a tendency to drive these prices down. Now, when the news can be a little bit all over the place with the current situation that we have politically, globally, and especially in the US. So when we're looking at this, I think that the reactions are more specific to news events rather than to what is actually being said and what is actually going on with the numbers, because this market right now seems to me like it is being quite reactive to things. We're seeing a lot of emotional trading, and I don't know if this is because there is I would hope that it's not because of more bots and more like AI driven stuff, but I would think that the larger retail component that has happened over the last couple of years drives a slightly different market sentiment. And there are companies, Visa is not particularly one of them, but like a company like Tesla, which has a lot of volatility based on news releases and tweets and things like that. So in this case, what we'd have to do is look at like MasterCard and say, you know, what's going on relative to all of the other ones. This is a Visa specific thing, and we can see that it's not. You know, the MasterCard is in the same sort of boat where these are good companies. The trend has been to the upside for a very long time. They make a lot of money, and MasterCard, again, processor, not lender. So is there any that do? I'm trying to think, because American Express is the same. What is the ticker for American Express? Why can't I remember it? AXP, there it is, American Express. This is one I don't trade very often. Wow, so it's on the upper side of this. And this is, you know, these are interesting things. Point of control at $300. We saw a long signal there. I wonder if there's some option trades in here. You know, I like that when we see something like Visa, like if there's any sort of rotational component between these companies, when I see something that is correlated like MasterCard and Visa, then what I want to do is say, well, is AXP trading to the upside, and what is going on here? So this is a bearish signal. Yeah, bearish continuation triangle. This is one of the things I love about Moomoo, is that it's showing those just real time. I've never looked at the stock on this platform, and it just pulls up that data and shows that we might have a downside, which is what I saw when we look at this particular chart. When I look at this chart, because Visa and MasterCard, when we look at it, we were already trading way down here, whereas this, we're actually trading above the VWAP and we're trading above the point of control. So this is where I might look for a slightly bearish continuation, without doing any technical analysis other than just looking at VWAP and the Bollinger. So let's go to the options chain and see what kind of risk there is. Going out just on a short duration, like 10 days, is there premium here to be had? And are there any events coming up? Let's also check for that. Those are important things. So we see earnings not for a while. They missed earnings here just recently, and stock actually moved up slightly since then, and now is pulling back. The other thing I would do is go over and take a look at investing.com and Seeking Alpha. We'll take a look. So fair value 333, currently trading at 346, so close to its fair value. So this means that I would look for like a neutral trade on here. I'm also going to look on Seeking Alpha. We're going to take a look here, and we're going to show the valuation is showing as an F. So this means there could be some downside, but the growth is good. The profitability is good. These companies do make a lot of money. So let's take a look at a neutral trade. I don't want to take on any upside risk in case it does move up with the market, if the market does decide to move upwards. And what I want to do is find something here where we can make some money off of it. Now, when I'm looking to the downside, ideally, I'm either selling short puts or I am doing some sort of diagonal trade. I like the diagonals because if the market volatility increases, if we see a down move, then the volatility increase helps a diagonal. So we've got the 330, and if I was to just sell that, I would collect $266. But you're going to look at this and say, well, this is a huge amount of risk. This is a $32,000 position. Max profit is $281, 81% probability of profit. How can I make this better? How can I still make, you know, potential money, $283, without taking quite so much risk and taking so much capital that I'm tying up? Well, the first thing I can do is I can just go and I can buy another put. That's it. If I go out, say 30 days to March, and I buy a put down here, this is going to dramatically reduce the capital requirement. Now, if I do it at like the 240, I still have lots of risk on. I'm basically spending $30 from my 283 collected. And if you look at this curve, you're gonna see the max loss is now 8,700. Max profit is 270. And again, so very, very large amount of risk, just small amount of return. But what I can do is I can pull this over. I can start to move this now that I have these puts in play, and I can find a sweet spot. So as I move this over, I decrease my probability, I decrease my max profit, and I decrease my max loss. So I'm bringing myself into a trade that might be much, much better for me to play. If I bring it close enough, well, now all of a sudden I've only have a max loss of $2,000, max profit of $396. I can actually make more money on this. This is where what I often do is I will like slide over and just see what kind of profit tent I might be able to get. In this kind of case, I have a max loss of 481 bucks. I have a max profit of 661 if the stock was to trade down at that 330 level. Then I can layer these on. I can say, well, what happens if I sell 2 of these? I now know that my max profit is much, much bigger, 944. My max loss is back to that 333. And I have still a 69% probability of profit. The stock would have to go above 366 for me to lose money to the upside on this. And I'm paying about 132 bucks to get into this. I can add a second put to this. And this is where we really get to accelerate the amount of growth that we can get, because now I've got a max loss of $9,000 and I have a max profit of 933. I've got a 66% chance of making money. I have a very nice wide range. I've got positive theta decay, and I have the chance of making up to 10% return with relatively low risk. I mean, if the stock does go down, there's going to be some IV expansion, and we're going to see that around that 323. Again, I can reduce this a little bit more and increase the amount of money that I can make on this, decreasing my probability of profit. Max profit 966, max loss 43.94. This is what I like to do with these types of trades. You can see I brought that break even in a little bit by doing this, but I also flattened the T0 line as I moved over. So there's a lot of little nuance. This actually cost me 268 to get into it. So at expiration, this would make 285 if the stock didn't move and nothing changed. When I had it, when I was paying less for the long put, this March 30th put, I have greater potential of making money, 329, but I'm also taking more downside risk. I have $7,000 worth of risk. So it really depends on the type of trader, how big your account is, all those different things. But these can be quite lucrative trades to just set something up like this, where we're doing a little bit of we're doing a calendar and a bullish put spread on here. The other thing I can do is I can go and I can just sell a call spread above it. So if I'm doing this, I can do the exact same thing on the top side. So I can go to February 27th. I can go out to the 370 calls. I can sell one of those. And this isn't going to let me do this because Moo doesn't let me do these combos. But let me just delete some of this off here, and I'll show you what the call spread looks like by itself. So we've got that February 27th. We go to the March 20th, and then we just buy the 370 here. So this is going to cost, if we look at this curve, this makes money between 348 and 395. That kind of extends that coverage quite a bit. It means that if the stock stays where it is, it's going to lose 64 bucks. And if it goes down, we're going to be giving up about $290. But remember, that profit tent was pretty big to the downside. There was like $900 potential profit. So if it does slide into that area where I think it might go down to 330, I would lose 266 bucks on this, but I would make 900 on the other one, giving me a net profit of about $600. This extends my upside range by quite a bit, and it's an easy trade to put on. So it cost me about 500 bucks to get into this call calendar, plus a put calendar, plus that bull put diagonal, if that makes sense. I know that's a lot, and this is the type of thing that I do, and this is why I offer the service that I do, which is quite specific. It's like I put on like the screen grabs of exactly the trades that I'm doing, exactly the adjustments I'm doing, and I post that right in my Discord chat. So it's real time. You get to see exactly the adjustments that I make. I try not to put on trades that have too many adjustments. You know, my preference is to put on a trade. Like I had a great little Iron Condor today that's expiring. I put it on 7 days ago. The idea was I was going to ride it until today. The SPX stayed in the range, and it was a little trade that made a 10% return in a week. And that is the type of thing that I like to do. So put it on, ignore it. I'm not really ignoring it, but ignore it for the most part. There's no adjustment. And then just today, I was able to close the portion that was potentially under risk and take that spread off and just let the rest expire. Nice little profit. And we rinse and repeat. So I'm repeatedly doing those same trades over and over again, looking at ranges, and then specifically hunting for trades like this, like on AXP, and saying, okay, well, here's a potential setup. With Visa, did we get into actually any sort of trade idea? We didn't really look at it, did we? Visa, poor man's covered calls are obviously the things to do. I talked about this butterfly that we looked at, but so I really think that adding, selling one more call here and then selling a put below at like the 300 level a week out, this should give like a very nice neutral trade. So this is the delta on this is dead flat. The break evens between 299 and 338.95, and theta decay is 26 bucks a day. This is the type of trade that I would put on. Now this has got a bunch of butterflies to the top because I'm expecting, or would expect, that we're going to see a little bit of a rebound. This could easily be done without so many of these, and if that was the case, there's just a full straight up bull play. This is, let's reduce this down to 2 butterflies. And there you go. This gets a credit of 30 cents, which isn't much. This is a totally bullish trade. It has a nice profit tent where it can make up to another 950 bucks on this if it trades around that 335 level, which is a pretty high likelihood that it's going to return to that level. But if it doesn't, as long as it stays above 300, we make at least 30 bucks on this trade. So that's one way to do it. And again, we could add that short call, and that would add that upside risk, and that would make it even more neutral. So looking at those types of things, max profit $1,100, probability of profit 82%. The probability of profit on this one is 92%. Extremely large potential. Now I can reduce this number down here. This is going to give me 92% probability of profit. It's going to collect $68. I have a smaller tent in the top side, and I don't need that tent. I mean, I could just sell the put. This is like simple trading. There's the problem with this is the max profit's only $100. I really want to try to trade these ranges because taking $100 on a $29,000 trade, not my favorite. Hopefully that helps. NVIDIA, yeah, let's take a look at NVIDIA. Thanks, Andrew. We didn't talk about it, but let's look at NVIDIA. So we're looking at Moomoo. Nothing's coming up on the chart. We're definitely in a consolidation zone. Let's take a look at on Trading View. I should have it here. We're above the VWAP. We're above the point of control over the long term, but we're right at the point of control in the short term. Look at that bell curve of trading. I'm gonna just not move my mouse like that, but look at this bell curve. Like this is consolidation mode if I've ever seen one. The question is, we saw a bounce at VWAP. Do we test this again? Do we break under this low? If we do, there's potential that NVIDIA could run down. This is, again, something people are talking about in the market. Like, is this an AI bubble? NVIDIA is making a ton of money. The question is there enough valuation in these tech stocks to warrant buying these shares at $186 a share based on the current valuation? So let's take a look at investing.com and see what the calculation is, so we can kind of get an idea. And again, if you guys are interested in investing.com, check it out. That price, that 70% discount is pretty awesome. So, they give me a little kickback, and I hope that kind of thing helps you, getting a discount on something that might really help your trading. It's improved my trading dramatically. Stocks trading at 186, fair value 198. So we're trading 6% below the calculated rate. Let's look at, and the reason I use multiple resources is because what I want is to get correlation on here. Valuation showing is an F here. So this is saying it's like slightly overvalued. So these two services don't correlate. Now we see some analysts in here showing a buy, Wall Street analysts showing a strong buy, and the quant rating, which is the seeking alpha, showing it a hold right in the middle, 3.5. Massive growth, massive profitability, pretty good momentum and good revisions. We'll see what happens. Great performance in the last little while. Okay, Frank, can I put the trades in the chat? Sure. You guys want to watch me type? Is that you know what I do in general, like with the way that this works is that becomes like the trade posting, like what trades I'm putting on, becomes part of my premium service. That's what I do in Discord. If you were to look at Discord and say, well, what did Levi play today? That is when I've done like the deeper than these, snapshot analysis that I'm doing. I look at it, I look at all the levels, I compare everything. And for me to just like randomly do this, I'm showing you the kind of the process of how I get to specifics of a trade. And then once I alert those trades and once I actually put those trades on, that's when my premium service kicks in. And it's why I charge for it, because it's a huge amount of work. I'm putting on 10 to 20 new trades a week. I typically have 100 trades on at any time. So there is a lot of information out there. There's a lot of adjustment. And then we can have discussion about that further because it's live in my Discord. So people can actually say, well, why did you do this? And what are we looking at? What are the levels? And we can have some discussion around it. It's why I offer it. Exactly what you're asking for is why I started my premium service, which is what I started, now I've been doing it for 9 years. I can't believe it. I have posted, like last year, I don't even know how many I did. It was like 570 trades or something. It was some extremely large amount of trades, but I have been posting every single trade, every single adjustment for now 9 years. And I do that behind my paid paywall, which is why I don't do it here. But you guys are more than welcome to grab the screenshot of anything. So if you you want to see what the trade setups were, I think we ended just on the short put in this, but you can go back and you can watch these streams anytime and say, okay, well, what was the trade that he was setting up? And you can watch my discussion on what I might take and what I might avoid. Something like this, I probably wouldn't take a trade like this right now because the max profit's only 100. I liked having that potential butterfly to the upside, and I don't mind spending some of this money, this $100 that I'm collecting, if I can give myself a larger profit 10. Now, obviously, the cheapest or the ones that have the highest probability are going to be the at the money ones. And we can see those right in Moomoo. So if you haven't checked out Moomoo, I've got, again, a link in the description or a link on my website. If you use my referral link, you get a discount, but you can sign up for a free account and check it out. And they have amazing resources from just buying a short butterfly. This is the 3-day butterfly. Max profit of 451, max loss 266. If Visa trades between 315 and 324 over the next couple of days, the further we go out, the bigger these typically get. So if we look at this short iron butterfly for next week, we've got up to $726. Max loss is 491, 312, 327. And these are good starting points to kind of give us an idea of where we expect the move. Now, one thing that I like to do in this is you can plug in the expected move in a percentage here or in dollars. So if I look at this straddle, I'll show you guys a little trick that I like to use. So say I'm looking at the 10-day and this straddle is worth $1,019. This means that my expected move is about $10 to either side. And I am going to multiply that by 0.8% or 80%. And so that means the expected move is plus or minus $8. So if I type that in here, I could do the math for you, but I just did it in my head. This was relatively easy. We've got the straddle. You guys are following there. The straddle cost or the straddle profit of selling an at the money straddle is worth $1,000. I take that $1,000 and I divide it by, I multiply it by 80%. So you could, however, just times by 0.8. So in this case, it's about $800. So I put in that expected move 800. That shows me these orange lines. This is what the market is pricing in. That is the expected move at the current price. Now this changes. You can see a straddle is a fantastic trade. The break-evens are slightly closer than with a strangle, but the max profit is way bigger. This can make $1,000. the strangle can only make 330. So when we're getting into neutral playing, when the VIX is high, these are great trades. These are great by themselves because the volatility is high already. When the VIX is low, then this is when I switch over to these long butterflies. As we go further out, some of these butterflies get extremely cheap. So we can look at this and we can find anomalies where this potential of this trade is double what we're collecting, and we can move that over. Now on Visa, you'll get a feel for how big a butterfly needs to be extremely cheap. But let's look at this one. This is $20 wide. We've got the 330, 320, 320, 340. So this is a very simple setup. We've got a bull put spread and we've got a bear put spread in here. But this is all puts. It's the same as the short butterfly, except this is slightly different strikes. We've got a short put and a short call at the 320, which is the same because that's the at the money price. And then this one has wider wings. It's a $25 wide on the top and the bottom, and it's using calls and puts. We can see that max loss 1,000, max profit 1,400. Typically, if we go tighter with these, if I was just to build this out, let's go to March 20th, and we're going to look at the chain. So 30 days out, I'm going to clear all of this off. And we're going to open up this March 20th chain. If I was to sell only $10 wide, let me just do it with puts, okay? So I'm just going to do a put butterfly, but I'm going to do it. Let me just go to custom, because this is how my brain works. This is the easiest way. So I'm going to, again, clear this. So I'm in the custom tab. I'm going to go to buy the 310, sell the 320, buy the 330. I'm going to sell two of the 320s, which are at the money. This costs me $1.40. Let's look at this curve. This is like a massive potential. Could make up to 870 bucks. Now the problem is the probability of profit is only 26%. And this is where we need some sort of direction one way or the other. And in this case, how might I do this? Visa's already at a low. I think the risk is to the upside at this point. This is where I might sell another put in here. And I would just give myself the potential of making money. Now the max loss is huge. So in order to cap this, I have to either buy some puts below or move this put further down. So if I'm going to sell 3, what if I buy a second one? This is going to give me a 132. This is an excellent setup for butterflies. The break even's at 313. The max loss is 750 bucks. Max profit is 1,200 bucks. If the market goes up, this trade makes $242 on a $750 risk. That's a 30% return on risk capital right here. And this is always what we're trying to take a look at. How much money are we making relative to the amount of money that we're risking? Has a potential of making $1242. Now, I don't love this trade for one reason, and this is where the nuances come in. This probability of profit is only 60%. This is an aggressive trade, but if all I have to do is manipulate this whole trade a little bit, and I can increase the probability of making money by moving this break even over. Ideally, I want this probability of profit to be 69%. So let's just do that. Let's just move these over one strike each. I'm just sliding these over $5. Here, my probability of profit is 65% now. I still have a max profit of $1,100. My max loss has increased a little bit to $865, but I'm still collecting 135 bucks if Visa goes up, and my profit tent is actually lower than the current price. This actually makes more money if the stock goes down than up. So depending on which way we think, if I had a portfolio, it's relatively delta neutral. It's a positive delta of only 11 because it's such a flat trade. If I had a portfolio that I wanted to take risk off to the downside, these are the types of trades I might consider. So I can just, again, slide this over. I'm going to do one more time. This 132 setup becomes extremely nice. Now I've got a 72% chance of making money. Max profit is $1,000. Max loss is $952. I make 50 bucks if the stock goes up. But this gives me a near expiration, a very, very nice profit tent. If Visa's trading anywhere between 304 and 320, I get to close this for an additional credit at the end of the trade. Now, these are spreads. I would not want to hold this through expiration, but I can hold this very, very close to expiration. The cool thing about this is that as the date moves on, watch this T0 line. It'll start to increase. It's not massive, but it's increasing. See that dotted line? Increase, increase, increase. So, and with March 18th, with 1 day before, I'm still nowhere close to the peak. So there's very much, the butterflies like to be held right to expiration, which is why I like to sell them on such a shorter duration than this. So in this case, what I might do is say, okay, well, I like this trade, but what does it look like if I do it only on 10 days? And I would just move all of these to the 10-day strikes and then see if I can get a net credit to open that. And then I would trade this weekly over that time. In this case, I'm not getting any credit for the upside. I'm paying a debit to get into this trade, which I don't like, which means if the stock goes up, I lose $100. So again, this probability becomes super important. Only 30% probability of profit. How do I increase that? I move the strikes over closer to where we're trading because I'm trading with a shorter duration. So 325, 315, or I trade them tighter together. That's another way to do this. This is $10 wide. Maybe I just go to the $7.50. But Moomoo makes it super easy. This is $7.50 wide. Now butterfly, 308. Max loss is $700. Max profit is $700. 78% probability of making money. So small credit to open though. So if Visa rolls up, only making $1,800 or only making $18 may not be worth it. And this is again why I go through a little bit longer process to really cherry pick these trades, and then I post them to my Discord. You guys are welcome to join the free Discord as well. The link is on my website. So if you head over there, you can sign up for the mailing list or not. Either way, there's a link to the Discord. It's right on that homepage. Just scroll down and just join the community. You can head over there and check it out. Easy money, it's 12 o'clock, but let's do one more. CCL's working to the upside. Frank says, got you. Ryan says, worth it. Thank you, Ryan. I do appreciate that very much. And Pablo says, and Espanol. I don't speak Espanol at all. I wish I did. I'm a sad Canadian. I don't speak French. I just speak English, but I'm really good at math. So, you know, you got to have some faults, right? Maybe Spanish is for some people. I'm playing the math game. Which one is beneficial? I don't know. Let's look at CCL to the upside. I'm going to do it straight in Moomoo. And if you guys haven't played Carnival, it's fun little trade when it's working and not so much when it's not. $32. Wow, this is pretty good. I haven't played Carnival for a little while. It's been having quite a good run since 2022. That's nice. And CCL is working to the upside. So easy money, just give me a little bit more there. What are you thinking? I haven't played CCL in a while. So are you looking for trades that you think it's going to continue to go up? Or are you thinking that it's going to go pull back? Are you just rolling puts? What are you doing? This to me, when I look at this chart and I see the point of control, which is down here, that white line of $28, and we see some indicators on the Bollinger being above VWAP. These are all the types of things that I'm like looking at going, well, I don't want to play too bullish from here. I would be looking at this point of control saying, I want my break even around that $29 mark. For any trades that I'm putting on. So I would effectively, I don't mind having no upside risk, but I would want my break even to be around that level, around that 29, just looking at the chart. Then I would go over and I would take a look at the same data on Carnival, and fair value $37. So we're 13% below that. And then I would look at Seeking Alpha. And again, this is just like the quick and dirty. You know, we can do a little more analysis or a little less. Quant rating's a strong buy. Wow, you don't see a ton of those. Valuation's a D, and the quant rating's a strong buy. I don't know how those correlate, but that's what's happening. 4.61 profitability is an A, growth is a C+. We've got good momentum, good vision. Buy. So just on a quick little quick little thing there. Yeah, sure. Love it. And then obviously, you know, the big caveat here, stock price movements are quite volatile. We can totally see that is potential because it, you know, again, it's like news or pandemic or anything can affect, you know, a company like Carnival. So let's build a trade. Let's take a look. Now that we've done, you know, 30 seconds of analysis, let's, what can we do? Let's go just to the strategy builder and say, okay, where's a neutral trade? You know, what does this look like? We've got on the 3-day expiration, we've got a little position here between 32 and 33% probability of profit, cost $28 for a max profit of $64. Could be, may not be. CCL have earnings coming up. We've got dividends being paid out. No, I don't see earnings in December. So earnings aren't a thing. One of the things I would look at on this is doing like a diagonal. So let's do a diagonal and see if there's any cheap diagonals around. So on the 10-day, this is the 3-day, 10-day. Let's not do that one. Let's do the 10-17 and just see, is there something that is cheap that we can buy? So if I was to buy this, this is the 31. Let's take a look at this curve. What are we pulling up here? We're selling buy order. Let's look at this curve. This is more what I was looking at. That's weird that the showing. I want to reverse these. I want to reverse this. This is sold and buy. No, I just want to reverse the strikes. So this would be like the 36. I'm going off already on the, and then this would be like the 31. So, and the reason I might do this is because it might give me a position where I can buy more of these. So if I think that it's going to go up, I can do a trade like this. It's relatively cheap, and then I can do a whole bunch, and that can help me considerably on this. So stock, here's the break even, that 32.64, and I said I wanted my break even a little bit lower than that. So the first thing I do is I bring my short put over, and I maybe bring this over and just say, okay, here, where can I get my shorts, my break even a little bit lower? And then the way that I might play this is doing this as a ratio. So I might, you know, sell 5 of these and then buy 4 of these later dated puts. And then this is giving me a credit of $44. I wanted that break even around 29. What I'm going to do is I'm going to move this down to a lower strike. Wow. Well, look at that trade. It's a completely negative. So let's see if we can do the reverse on here. Can we get a fully positive trade? Can we do this for a credit? I doubt it. So this would give us all puts, cost us $57 according to Moo right now. It shows 100% probability of profit, max profit to the downside. Interesting. If we can get filled on some of these, this can be quite lucrative. If the stock rallies, then you know, the puts become potentially worthless, and there is some upside risk where you have whatever you paid for this. This is showing a mid price. Yeah, it's just showing a weird mid price in here. So it depends on what you can get this for. And again, this is like low volume stuff. Typically what I would do is I would be selling more than I'm buying, and I would try to be getting a credit for this, because the max loss on this is $5,000. So if I can get a credit of $50 to open this, I'm actually making 1% return over the next 10 days. And if the stock drops to that $30 range, then just around it, then there's a chance of IV expansion, which could give me even more money. If this IV expands, this starts to become profitable. But it's low volume on these types of trades. So not the best for spreads. That's why I was trying to keep it super simple. When we look at something like Visa, American Express, Tesla, we can do whatever we want. We can build a butterfly, no problem. But with something like CCL. That's how I would trade it. I would trade, you know, some sort of naked put with a combination of diagonals with it, and then open that for a nice credit. So I know what my total max risk is, and it's really only a 2-position play. I have like one extra short put over the long puts. Hopefully that, oh, you asked for what has worked for us lately. Well, thank you. I can see why CCL's been just on like a move to the upside. That's fantastic. Okay, you guys are great. I'm gonna let you go. We are trying to get rich together. If you're not on the mailing list, check out my website, get on the mailing list. If you have any questions about anything, send me an email. I will respond. Okay, thanks so much, everybody. Let's get rich together. Take care.